You know, when you look at Tesla right now, it's like you're seeing two totally different companies at the same time. On one hand, you've got this incredible story of a futuristic AI and robotics powerhouse that's about to change, well, everything. But then there's the other story, the one about a car company that's hitting some serious bumps in the road right now.
So that's the big question we have to ask, right? If you're thinking about investing in Tesla, which company are you really putting your money on? Are you betting on that amazing dream of what's to come? Or are you investing in the nuts and bolts of what's happening today?
All right, let's dive into that future vision first. This is the big AI dream that's getting so many investors really, really excited.
And hey, a massive piece of that puzzle just fell right into place. Tesla actually launched its robotaxi app. I mean, anyone in the US can get on the wait list right now. This makes it so much more real, you know? It's not just some far-off idea anymore. It's a real, tangible step towards a future of self-driving cars.
Think about what this means for the business. It could change everything. Right now, they sell you a car one time, it's a one-and-done, lower-margin deal. The goal here is to switch to selling you rides over and over and over again. That's high-margin, recurring revenue. Suddenly, Tesla starts looking less like a car maker and a whole lot more like a high-tech software company.
But believe it or not, the vision gets even bigger. It goes way beyond just cars. Elon Musk himself has said that the real treasure isn't even in transportation, it's in robotics. He thinks the Optimus robot, their humanoid robot, could open up a market that makes everything they've done with cars look tiny by comparison.
Okay, so that's the dream. It's a pretty incredible one. But for every bit of that future optimism, there's a dose of cold, hard reality based on the numbers from today. So let's flip the coin and look at the challenges Tesla's up against right now.
So it's this real clash, isn't it? On one side, you've got this exciting, world-changing stuff like robotaxis and robots. But on the other side, you've got the business that pays the bills today, selling cars and making a profit. And that side of the equation, well, it's feeling some serious heat. Just look at the second quarter. The money Tesla made just from selling cars, it dropped 16% compared to last year. Now, for any company, that's a concern. But for Tesla, a company whose whole value is built on the idea of insane, nonstop growth, a drop like that is a huge red flag for investors.
And it's not just about sales. The pain goes deeper. Their operating income, down 42%. And get this, free cash flow, that's the actual cash they have left over to, build that future, it plummeted by a staggering 89%. That's the money they need to fund the whole AI dream. And all of this is happening while competition is getting fierce, forcing them to cut prices, which just squeezes their profits even more.
So it's probably no surprise, right? This massive split between the dream and the reality has Wall Street analysts totally divided. They just can't agree on what to make of Tesla.
You've got the super optimistic camp, the bulls, like the folks at Wedbush. They're saying, forget the car stuff, this is an AI stock, and they're slapping a massive $500 price target on it. But then you have the more cautious camp, the bears, like Barclays, who are looking at the current numbers and saying, whoa, hold on, the fundamentals are looking weaker. The middle ground, the median price target, is sitting around $306, which tells you a lot of experts think there's some real risk here.
So, where does all this leave you, the investor? Well, it really boils down to a fundamental choice you have to make if you're looking at Tesla right now. The story of Tesla is really a tug-of-war. It's the dream of tomorrow pulling against the reality of today. And investing in the company right now, it's really a bet on which side of that rope is going to win out.
And here's the tricky part. Both of these stories are true at the same time. That's the real dilemma. So the final question you have to ask yourself isn't just, will the AI dream come true? It's, can the company get through the tough times now to even make it to that future? It really comes down to this, future potential versus present value. What's your choice?
Welcome to The Explainer. Today we're tackling Tesla's stock. It's a roller coaster, caught between an AI dream and an EV reality. What's really driving the price? Just look at this. On one single day, the stock jumped over 7%. A surge like that makes everyone ask, what is going on here? First, the optimistic view, the bull case. Let's see what's fueling this big rally. This analyst quote sums it up. He sees strong, confident buying in the stock charts. He thinks this has real momentum. Here's why. The excitement isn't just about cars. Wall Street now sees Tesla as an AI and robotics leader. They're also making progress with driverless tech for robotaxis, and their energy business is booming. That's the future people are betting on. And it's not just talk. 84%. That's where the big money is betting. Hedge funds and banks are overwhelmingly convinced the stock will go up. A huge vote of confidence in the AI story.
So that's the bull case. But is it really that simple? Let's flip the coin and look at what has investors worried.
Okay, now for the bear case. This is all about the serious risks in Tesla's main business of selling cars. This chart is key. Yes, Tesla sold more cars, but the whole EV market grew faster, so their piece of the pie actually shrank to an 8-year low. Competition is definitely catching up. And that competition is fierce. You've got classic automakers and new rivals. Plus, a key government tax credit might change slowing sales. And some see the CEO's other ventures as a distraction. And this is where it gets wild. Look at the experts. One says the stock is going to $500. Another says, here's another number that worries skeptics, 223. That's its price-to-earnings ratio. For every dollar of profit, investors are paying $223 for the stock. That price is based on huge future hopes, not current reality. So, what's the bottom line? It boils down to a battle between two different stories. On one side, today's reality. Tesla is a car company in a tough fight. On the other, the future promise, that it'll be a leader in AI and robotics. This tug of war is everything right now.
So in the end, it's this question. Is Tesla a car company at its limit or a tech company just getting started? Right now, no one knows which story will win.
Tesla stock has been on an absolute tear, hitting new highs and grabbing all the headlines. So what's really driving this thing? Are we looking at the future, or is the market just getting way ahead of itself? Let's break down both sides of the story. Okay, let's put a pin in a specific date. On September 19th, 2025, this was the price for one single share of Tesla, $426.07. Now, for a company this big, a number like that, well, it definitely makes you want to look closer. And get this, that price was after a jump of over 8% in just 1 week. We're talking about a gain of billions of dollars in market value in just 5 days. No wonder everyone's talking. Which brings us to our big question for this explainer. What's really fueling this fire? Let's start with all the good news first. First up, we're going to look at what the bulls are seeing, all the positive signs that have investors feeling super optimistic about where Tesla is headed. Okay, so talk about a vote of confidence. CEO Elon Musk just bought $1 billion worth of his own company's stock. That's called insider buying, and it sends a really powerful message. I mean, who knows a company better than the CEO, right? A buy this big suggests he thinks the stock has a lot more room to run. And on top of that, you've got this trio of great news. First, new robotaxi permits in Arizona and Nevada. That's a huge step toward that self-driving future they've been promising. Second, the new Megapack 3 shows that Tesla is serious about its energy business. It's not just a car company. And finally, the whole market is kind of optimistic, expecting a Fed rate cut, and Tesla's definitely riding that wave. And all of this feeds into a much bigger story. Like analyst Dan Ives said, Tesla is a symbol of AI confidence. Investors aren't just buying a car company anymore. They're betting on a future where Tesla leads in AI, robots, and clean energy. But all right, let's pump the brakes for a second and look at the other side of the coin. For every optimist, there's a skeptic. And the bears see some pretty serious red flags here.
So the bears are basically asking, look, is all this excitement actually matching up with the company's real performance right now? And this is their headline number 168. Tesla's stock is trading at 168 times its annual earnings. To give you some context, the average for a big company is usually around 25. So what does a number this huge actually mean? It's called the PE ratio. Think of it like this. It's the price you're willing to pay for just $1 of the company's profit. A PE of 168 means people are paying a massive premium because they are betting that future profits are going to be astronomical. For the skeptics, that's a major red flag.
And that high price tag is paired with another risk. Competition is heating up. As you can see, Tesla's piece of the U.S. electric vehicle pie has dropped to 38%. That's its lowest point since 2017. The market's growing, but Tesla's share is shrinking.
And here's why. Competition is coming from everywhere. You've got the legacy giants like GM, Ford, and Hyundai pouring billions into EVs. And at the same time, new global players like BYD and Xiaomi from China are jumping in with some really impressive and often cheaper cars. This whole viewpoint is summed up perfectly by Garrett Nelson over at CFRA Research, who just straight up calls the stock overvalued. So you have experts on Wall Street looking at the exact same company and coming to completely opposite conclusions.
Which brings us to the heart of it all, the investor's dilemma. It really is a clash between two totally different ways of looking at a company's value.
You can almost picture it like a tug of war. The bull case is all about betting on the future, on everything Tesla could become. The bear case is focused squarely on the present, on the hard numbers today. So let's just lay these two stories out, side by side. The bulls see this incredible vision, AI and robotaxis, insider confidence, a growing energy business. The bears see today's reality, a sky-high valuation, falling market share, and competition coming from every direction.
So, in the end, it really boils down to this one question for any investor. Are you buying into the company as it exists today, or are you buying into the vision of what it could become tomorrow? Your answer to that is what's making Tesla one of the most fascinating stories on the market.
Tesla, let's be honest, you can't escape the name. It's everywhere, in the headlines, in every debate about the future, and it takes investors on one heck of a wild ride. It's easily one of the most exciting and, confusing stocks out there. So today, we're going to cut through all that noise. We're going to figure out what's really driving the hype and whether it's actually justified.
And really, it all boils down to this one single question. Is Tesla just a car company that uses some pretty cool tech? Or is it a revolutionary AI and robotics company that just happens to be making cars for now? Because how you answer that question, well, it changes everything about what you think this company is actually worth. And the stakes? They could not be higher. I mean, just look at this number. We are talking about a market capitalization of $1.4 trillion. To put that in perspective, that's more than almost all the other major car manufacturers combined. A valuation that huge means we absolutely have to understand what Wall Street thinks it's buying.
So here's how we're going to break it all down today. First, we'll dive into the bull case. That's the argument for why the potential here is pretty much unlimited. Then, we're going to switch gears and cover the bear case, a much-needed reality check. And finally, we'll wrap it all up with the key takeaway for you as an investor.
All right, let's kick things off with the bull case. This is the optimistic view. This is for the people who believe you're not just buying the Tesla of today, you're investing in the world-changing, science fiction-made real Tesla of tomorrow. So the most important thing to understand for the bulls is this. It's not about the cars, not really. Think of the cars as just the beginning. They're the hardware, like iPhones on wheels that are going to run the really valuable stuff, the software, the AI, and the data. The car business, that's just funding the real mission. And that mission, that grand vision, it really rests on three gigantic pillars. First, you've got full self-driving, or FSD, which aims to turn every Tesla into an intelligent, autonomous machine. Second, a global robotaxi network, a potential multi-trillion-dollar market where your car could actually go out and earn money for you while you sleep. And third, the Optimus humanoid robot, a product Elon Musk himself thinks could be bigger than the entire car business. And look, this isn't just wishful thinking. You've got prominent Wall Street analysts, like Dan Ives, putting some serious numbers behind this vision. He estimates that the AI and autonomous driving part of the business, just that piece alone, could be worth $1 trillion. That right there is the heart of the bull case.
And let's just take the Optimus robot for a second. Goldman Sachs sees a $38 billion market, which is huge. But Tesla's real play here is disruption. See, competitors are building these things for over $100,000 a pop. Tesla, they're aiming for just $20,000. Now, at that price, a robot suddenly goes from being this massive one-time investment to a simple operating expense. And that makes mass adoption a real possibility. That's how Tesla thinks about scale.
Okay, so that's the dream. It's big, it's exciting. Now, let's get a dose of reality. It's time for the bear case. And this argument isn't really about whether the dream is possible, it's about whether today's stock price has already gotten way ahead of itself.
The bears are focused on 3 really critical risks. You've got intensifying competition in the EV market, an extreme stock valuation that leaves absolutely no room for error, and a long history of really ambitious promises that, well, they haven't been fully delivered on yet.
First, let's talk competition. This is no longer a one-horse race. In Europe, which is a super important market, Tesla's sales have actually dropped by 1/3 this year. Meanwhile, a competitor from China, BYD, saw its sales nearly triple. Tesla's dominance is not a guarantee anymore.
Next up, the valuation. Tesla's stock trades at 166 times its expected future earnings. What does that mean? Well, to put it in context, a traditional car company like Ford trades at less than 10. It means investors are paying an enormous premium today because they're betting on decades of perfect, flawless growth. There is zero room for mistakes.
And that brings us to what might be the biggest risk of all, something called execution risk. For Tesla, this is all about the massive gap between the brilliant promises for tomorrow and the sometimes messy reality of today.
And you can really see this pattern of delays when you look at full self-driving. Back in 2019, the promise was millions of robotaxis by 2020. Okay, fast forward to today, heading into 2025, and the reality is a small pilot program that still needs human drivers. For the bears, this consistent gap between the vision and the actual delivery is their single biggest worry.
So we've seen both sides. We have the incredible blue sky potential on one hand and some very grounded real-world risks on the other. So what's the ultimate takeaway for anyone looking at this stock? What does it all mean for you?
It really all comes down to this simple comparison. You've got 2 different Teslas you're looking at. The bull case is a bet on the promise of tomorrow, a future where Tesla is the undisputed king of AI and robotics. The bear case, though, is a judgment on the price of today, a valuation that just seems way too high based on its current business of selling cars in an increasingly crowded market.
So the fundamental question you have to ask yourself isn't about spreadsheets or charts. It's really about what you believe. Are you buying the company as it exists today, the car company? Or are you betting on the company that's been promised for tomorrow, the AI and robotics giant? Your answer to that single question changes absolutely everything.